それでは参ります。
Thank you for waiting. This is the panel discussion, and the title of the panel discussion is Emerging Manager Allocation Strategy of Global Asset Owners. And these are the panelists who are on the screen. New Alpha Asset Management CIO Mathieu Klein, and Mr. Kirk Sims, Managing Director of Emerging Manager Program, TRS Investment Management Division, and Mr. Mizuha Suzuki, Investment Manager Kenjiro of Private Office Limited, will be joining us virtually online. So take it away. Please give them a big round of applause.
Thank you for coming today, everyone. Famous Austrian economist Joseph Schumpeter said, "Small is beautiful. Chisai koto wa utsukushi." My name is Ferenc Sanderson, and I'm a senior advisor for Visual Alpha, and today I will moderate. We have two goals: to try and give you a little bit more of an insight to what global allocators are looking at and how they allocate to emerging managers. And secondly, we hope to give you a little bit of an insight into what they expect from managers themselves and how they can become more attractive to getting some of the capital. I'm very fortunate that we have today joining us a very distinguished panel. On my right is Mr. Sam Chung, member of the Investment Policy Committee for the Korea National Pension Services, long-time investor in emerging managers. And then virtually, we have some other participants. Kirk Sims, Director of Emerging Manager Program at Texas Teachers, he's in Austin. We have Mr. Mathieu Klein, Chief Investment Officer of New Alpha Asset Management, who's in Paris, and Mizuha Suzuki, Investment Manager for the Kenjira Private Office, a single-family office based out of London. So let's begin. First issue which I'd like to go over with some of the panelists, obviously I'll start with Sam, is motivation. What was your goal, Sam, in getting involved with emerging managers? And how do you think emerging managers will help you achieve those goals?
I don't know. I can start first, or Kirk start first, because, well, let me start first, Kirk. Sorry about that, because I'm sitting here. Thank you for inviting me here. I'm so honored to be here, and to everyone. I think the panel, as the Ferenc said, we all around the world we have a panel. London, Miami, and Paris. I'm from Korea. I'm from Seoul. That's why I'm sitting here. Only 1.5 hour distance by flight. I came here yesterday. Actually, my main job is not manager. I'm an academics. I'm professor at Yonsei University in Seoul, teaching finance. And however, from the outside experts' the point of view, I involved the NPS Investment Policy Committee for the last several years. And also I'm sitting at the Investment Committee of Korea Post. NPS has now about 850 billion managing money, AUM, and the Korea Post has about 100 billion, and KIC has about 200 billion. So total, the top three in Korean, the LP, the asset owners, manage about 1.3 trillion US dollar at this time. Well, the first question the moderator asked me, why NPS looked at the emerging managers, the small size managers and young managers. Well, we all know. Number one reason, I believe, is return, performance. And number two reason, second reason, is diversification. Number three reason is try to support and help as a national pension system, the ecosystem of the capital market, domestic ecosystem. And if I think about the number one reason, well, as all we know, there are a number of different research, number of different reports regarding the valuation. What is the real value of emerging managers compared to non-emerging managers? Different academics conclude differently. Depends on the data, depends on the period, depends on the asset classes. However, on average, we conclude there is a premium, size premium and age premium, both in public market manager and private market manager. The thing is, such a premium, the emerging manager premium or small manager premium is fluctuate, is cyclical and is secular. Depends on the sector, it is different. The more important thing we found is there is a correlation between such a premium and a number of macroeconomic factors. And such correlation is pretty much significant if you look at the private market emerging manager rather than public market emerging manager. So, well, that's the number one reason we look at the emerging manager. Well, I explained too much specific about the academic research. However, the performance is the number one reason we looked at the emerging manager. And then well, obviously the risk, diversification. Well, we know the probability to alive next 5 years is much lower for the emerging manager compared to the large blue chip non-emerging managers. However, there is a diversification effect. So we compromised and we try to mitigate such a risk by selecting less correlated emerging managers in our existing portfolio. I think that's the second important reason. And also, in the morning, the chairman, Mr. Nakaso, showed us an interesting graph of the ecosystem of the capital market. There is a startup, there is emerging managers and matured managers, the graph. And we believe, as a national pension system, and also the KIC, the Sovereign Wealth Fund, and Korea Post, we need to contribute to make a win-win system in our total, the capital market. So we looked at, well, the history of emerging manager program in NPS is not that long. However, we started such a program, and then we try to keep this program to be a more robust program in the future. So we'll say more.
That's good.
Thank you.
Kirk, over to you again. What was the motivation behind Texas teachers setting up the Emerging Managers Program, and what specifically were they looking at by picking out different smaller managers?
Yes, so part of what we were trying to accomplish, I'm sorry, is there, no? Okay.
You good.
Part of what we were trying to accomplish was to build relationships at an early stage, allow those relationships to grow, and capture alpha at a stage that should allow the trust to benefit from getting into sectors at an early stage. The number one purpose is performance, always. But you also are looking to build relationships that will allow these managers to grow with you. And as they mature, your capital still means something to these managers. So when they become a $5 billion firm, you still can call them and they will pick up the phone because your capital was very important when they were younger and they were actively trying to build assets.
That's great. Mathieu, your perspective, what, again, why did you get involved, and tell us a little bit about your penchant for building a very strong reputation in that whole space.
Yes, good morning. So it's true that performance is first and foremost in the mind of our investors when they talk about emerging managers. But as for any other type of managers, whether they're established or emerging, selection is key. So it is true that different academic research, as has been said, is perhaps inconclusive about the alpha generated by emerging managers. But as in everything else, selecting the right managers really provides tremendous added value to a global portfolio. And that is what has been recognized by the investors we work with. We cover a large spectrum of external strategies, and we have acquired an extensive experience in allocating to emerging managers. And besides and beyond the added performance, emerging managers allow us to, as has been mentioned, access diverse sources of alpha that often cannot be accessed by large managers because of capacity issues. We believe that having an alignment of interests with the managers at the early stage of the life of their fund provides an added incentive. It's true that we want to secure capacity with what could become very talented managers and very successful managers. And as perhaps we will talk about in greater detail, we want to support the local ecosystem of financial managers, and we are running programs specifically dedicated to that effort.
Interesting. Suzuki-san, what is your perspective working out of London and trying to understand the whole emerging manager scene over there? How is it? What does it look like to you, and how do you find some of the talent out there as well?
Well, actually, talking about our goals, actually, why we look and follow up like emerging manager is more because we're trying to create a community of specialists, regardless, the sector or the region. And we are a family office. We look at long term. We're like long term like capital. So we need to build out a long-term thesis, and we need to have fresh input from specialists. So emerging managers in that regard actually help us to get like new inputs, and they tend to be much easier to reach out. So let's say you get a headline about uranium in energy transition context, or some governance or corruption issue in Vietnam. You're able to read them out, write an email how they do things in the short term and the market implication in the long term, so that we can learn from that. And yeah, if they come back in email, that's good. If they're you know, happy to take a cup of tea to talk about the world, that's great. And if they're out for a pint in the pub after the work time, you know, that's even better.
Pint of tea, I hope.
And in that regards, like, yeah, being in London is very helpful, because you're getting a good deal flow. People who are trying to raise capital from Europe, they, you know, come all in London. So in that regards, investing or looking for opportunities in emerging managers in London is very exciting.
That's good. All right, moving on. I'm interested in how each of you approach the issue of organization. Shoshiki. Sam.
Yes.
One of the big allocators that you know, do they typically will have a dedicated internal team, or do they outsource some of the operations? How typically would a large allocator look at organizing an emerging manager program?
I brought 3 asset owners from Korea as an example: NPS, Korea Post, and KIC, which is Sovereign Wealth Fund. All those 3 asset owners has a different system to look at the emerging managers. Depends on their infrastructure, depends on the governance structure, depends on their sophistication level. For example, NPS, they do a little mix of internal versus with the kind of outsourcing, consulting, or advisory services. They do use both way. And the Korea Post, they do 100% outsourcing when they look at the emerging managers. KIC, they do by themselves. Well, that may indicate KIC has more infrastructure and more experts in-house, you know, built in the experts. Might be true, but their purpose is also different. Their targets, their beneficiaries are different. So their investment purpose statement, IPS, is clearly different. So different system, different asset owners has a different approach. We don't think there is a standardized the system, the robust, optimized system for the emerging manager program. For example, NPS case, they started to look at officially to the emerging managers. It's about 4 or 5 years, right before the pandemic period. Under the theme of strategy-specific team. It is dedicated team not only for the emerging manager, but the secondaries and continuation fund and GP stakes. So something new strategy they want to look at, they all put together and then make a 5 staffs as a team member to look at only that subject, that topic, and started that. But it's 4 or 5 years ago, time passed through, and we start to separate each of those members to do only each topics. So there is a team for the secondaries and GP stake, and there is a team for the other strategies. Now we look at the emerging managers as a dedicated team. And
approximately how many people are in that?
How many people? It's a small number, three, four people.
And they're all in Seoul, or are they spread around
all in
the region?
Well, good question. Well, those 3-4 people working at Jeonju, which is not Seoul. NPS headquarters is a suburb of the Seoul, 2 hours of distance. But they are working with the NPS has 3 overseas offices, the New York, London, and Singapore. And those 3 overseas offices, they work very tightly with the team at the Jeonju. By looking at, and well, the role for them at this time, emerging manager program, is manage the pool of emerging managers and follow their performance and their issues, and we try to control how they are doing, what they are doing under the pool, our portfolio. Well, some of them already we deployed the NPS money to those managers, but most of those other managers are just, we just watch out how's their performance. So that is I think what at this time, those dedicated team working with the overseas offices is doing. So.
Oh, great. I'd like to ask Kirk, can you tell us a little bit about your selection process and also the uniqueness of something that you mentioned before, this graduation? Can you explain a little bit about how that operates?
Yes, absolutely. So what we're trying to accomplish is to build the relationship with the ultimate goal of graduation, moving from the emerging manager portfolio to the main trust asset class portfolio. So the selection criteria that we apply for private markets is Fund 1 through Fund 4. And for the public markets, is firms that are $3 billion or less. So what we hope to accomplish is step into a relationship with those firms, allow the firms to mature within the program, and then become a candidate for graduation. So TRS currently has 14 graduates from the program that is managing $5.2 billion. This is across private equity, real estate, and public markets. So that's the approach we take. If the strategy doesn't have the right profile for the asset class, it is highly unlikely that we would invest in that strategy. We want to give the managers a runway to be successful and to grow into the main portfolio.
Just a couple sort of add-on questions to that, Kirk.
Sure.
The emerging manager, typically, what kind of initial investment slugs would you give them, and how does that change when the manager graduates?
Absolutely. Very good question. So my normal allocations are between $20 and $30 million. The TRS normal allocation is approximately $300 million. So we need the manager to grow. We need to give them time to mature so they will have the necessary AUM to be able to take a $300 million check.
Understood. That's pretty good. Suzuki-san, I'm curious, how many meetings does your organization have with managers per year, and how many typically will you allocate to? Obviously, it's slightly different from these very large institutions, but I'm curious, what is your approach?
So actually I meet like around 50 to 60 funds a year post screening. And then let's say we try to follow up 10 of them on a monthly basis and quarterly for the others. And to be honest, we don't have a hard, targeted number for allocations or whatsoever. But I'll say like a handful of them. And actually, what's important for us is more like, let's say, the deeper relationship and the interaction that you can have, rather than the quantity. So it varies.
Mathieu, obviously, you come from a very illustrious program, the Emerging Manager Program of France, where I believe you've allocated over €1 billion. Can you tell us about your approach and, your assessment of whether it's been successful and how you measure success?
Right. As you mentioned, we have been running the Emergence Fund in France, which is the National Acceleration Fund. And its objective is to support local independent managers. The way it works is that we have gathered 16 leading institutional investors, and over time they have committed about 1.5 billion in 5 vintages, 5 vehicles that have been structured as closed-end funds with lockups and revenue sharing features. So success can be measured in various ways. Performance, have those funds, have they outperformed their benchmarks? And in most cases, it has been the case. And how many of these managers that we have accelerated have graduated to become established managers? And there again, I don't have numbers, but over time, New Alpha has allocated to about 120 emerging managers. And obviously, the experience we have gathered by allocating to so many managers in various strategies across asset classes has given us some confidence about the process that we use to identify the managers that are likely to become successful in the future.
Interesting. Well, moving on, let's touch briefly on policy. I think it's very important for extremely large institutions to have that whole issue straightened out. And obviously, Sam, working directly and indirectly with government pension fund, what is the responsibility that the government would have in growing an emerging manager program? What were the debate points which came out before a decision was made to get involved? And has it been a success?
Very difficult question to be answered, I think, to me.
You're on the hot seat.
Responsibility. I don't think there is explicit responsibility of such an organization, National Pensions has to the emerging managers. But, not explicitly, but from its nature, I think it's again, I want to touch about the ecosystem. If you look the national capital market itself, there is a lot of positive reasonings why they have to look at those emerging managers, small managers, not only the performance, but other aspects. However, the issue of allocating or selecting lookies, let me say lookies instead of emerging, because we do not call such a terminology emerging manager program in Korea. We call small manager allocation. The reason, the motivation of allocating lookie is come from two different sides, top-down side and outside, not from the NPS investment management team itself. As you know, large organizations has a tendency, strong tendency to be not changed. They want to stock in what they have done in the legacy program, their program. However, a number of different reasons pushing them, we need to have a look at the performance, in the long run performance, especially in Korea. There is a huge demographic structural changes. The fertility rate, birth rate is 0.7 or something, which is the lowest in the world. NPS now is 850 billion US dollar AUM. It'll reach 1.5 trillion in 6-7 years, and then it will go to zero in year 2051. And we have a strong motivation to consider the return of this program to make more smooth the line of our NPS, the future. So that is the strongest motivation. What is the solution? Any opportunity instead of the legacy portfolio concept. And that comes from the emerging manager or the small manager who has a less correlated and who has a more skill, we believe, to create the alpha for as a portion of the existing portfolio who has a positive, the impact or effect. And that comes from top down, and that comes from like us, the outside, the committee. NPS has 3 different special committees, which I'm sitting, the Investment Policy Committee and Risk Management Committee and Fiduciary Committee. All those 3 committees has a consensus about there are a number of things we can try to make that mitigate for the NPS existing problem. So I think that's basic motivation. And from the policy standpoint, I think that's the start point.
That's interesting. Suzuki-san.
Suzuki-san, ロンドンベースのファミリー
Or have you seen any differences in your approach to emerging managers to what you think your Japanese colleagues or institutions would have? What are the benefits of being in London, and why do you think your approach is appropriate?
So you mean the difference between the Japanese-based institutions and London-based institutions, right?
Yes.
Yeah, I think as I briefly touched, I think like each family office has different ways to operate, and it's very difficult to compare to regions. But I think London in general has its pure geographical advantage, where you're seeing fund managers, investors coming all into London and try to find the best partner or the capital to invest or to be invested. So I guess there's this strong notion or culture of finding and hunting and networking, which is actually very strong and embedded in the culture in here in London. So and yeah, sorry, please.
No, I was going to say, can you explain a little bit about the, you mentioned some of the infrastructure benefits of being in London. Would you say that it's very active in terms of cap intro, some intermediaries introducing you? How else, what other networks do you benefit from being in a financial city like London?
So yeah, in terms of networks, it can be anything. It can be peer group, like a family office. Again, like it can be pension funds, which you need like in networking events. You talk about one topic. If they have if they know a good fund manager, we get introduction. Of course, we use cap intro. But interestingly, there are some funds who actually introduce other funds. We say we're looking after following up the thematic of basic raw material or base material. Some of them are able to just introduce who they know, and that's how we get to know new people. And it's interesting because you think that people are fighting for their marginal dollar in terms of capital raising, but if you could find the good person or the partner, they are able to introduce you regardless of their position. And for that, you try to help them out too by, if they're looking for a Japanese manager or something, I'll try to help them out so that we can have a good, win-win kind of relationship. And that's a part of culture which I thought was very interesting here in London.
So it's give and take. That's pretty good. All right.
Give and give, and sometimes take.
Moving on, another area which I think is pretty important, maybe people in the audience would be interested as well, is manager selection. What strategies are you interested in when you're looking at, for example, Japan? Matteo, what are you interested in when you look at Japan today?
Sure. Well, the first thing to say is that as far as New Alpha is concerned, what we do is tailor-made for each of our institutional investors. So we work with our investors to define what the investment guidelines should be and what the selection criteria are for qualifying as emerging managers. That means we don't have a single definition for emerging markets, and quite often the decision to allocate to such and such strategy or geography is taken in concert with the investor. I'm saying that because emerging managers are part of a larger portfolio. To answer your question, sometimes a specific strategy or geography, such as Japan, for instance, will be looked at with a wider lens than just through emerging managers. But I think we all agree that emerging managers have a better and higher chance of generating alpha in strategies such as equities, long-short equities, niche strategies, specifically strategies that are investing in smaller and mid-cap managers. So that would be, as far as Japan is concerned, that would probably be our main focus.
And what about you, Kirk? Are you currently, I'm guessing the main portfolio definitely has some exposure to Japan. What about through emerging managers? Is it directly or indirectly that you're looking at Japan?
Yes, what I'm looking at Japan for is monitoring the growth of the private capital market, not so much the public market. We do have some exposure to Japan through our hedge funds, being Pan-Asian hedge funds. We do not have country-specific strategies in the portfolio. But what I am looking at is what I see as the growth opportunity in the private markets.
Would that be VC, buyouts, or everything?
Yeah, so for me, I'm not doing venture capital investing, although what I do pay attention to the venture market. And that's the highest growth market right now in Japan. And so, but what it does is allows it's the foundation of the private capital market. As the VC market grows, it should make opportunities in growth equity and buyouts more possible as those firms continue to mature.
Interesting. Just generally for anybody, what advice would you give to a small manager in Japan with solid performance, good background? How should they try and, if they were interested in reaching out to you guys, what is the process that you would? I'll start off with Sam.
Well, before that question, I want to add one comment on the previous question. Japanese market, what sector or what strategy is interesting? Well, we're talking about the emerging manager in Japan. And so if I think about the emerging manager in Japan, well, before that, the Japanese market is very trendy and hot from Korean point of view. A lot of the equity market plus and other real estate market compared to US and the European real estate market, especially the CLE market, Japanese real estate market and equity market. Many of institutions in Korea look at the Japanese, the future potential. Is this the right time, or we have to wait, or, well, this is the timing issue, but we will look at the market. However, if we think about EM, we would like to have an active Japanese equity market manager. Public market, listed market can find out many ETFs and many. However, as a foreign investor's point of view, to allocate different countries, the equity market, we want to have some flagship active manager, like a hedge fund, equity long short, hedge fund, like that. So I think that's one good strategy or the sector we are looking at, and followed by the suggestion. Well, I have my friend who is running his small asset management, like an emerging manager in Korea, and he had a issue of raising his fund domestically, because he is typical lookie in Korea, and what he did, and I suggest that as well, is, well, if the FinCity listen this, they may not like that. Look at other market as well. It can come from other reason first. Well, FinCity Tokyo, FinCity Singapore, FinCity Seoul. There are a lot of opportunities, alternatives. So I don't know, is this appropriate or not? We're talking about this.
So
however, the bottom line is there are opportunities. There is no barriers, boundaries, colors of the fund. So if it works in Tokyo, it will work in other cities in APAC. That's what I believe. And my friend, he very succeed now. He got the money from others. Now he got money from the domestic. So, well, that's my piece of advice. Thank you.
Appreciate it. I think we've pretty much hit our time limit, and most people probably want to rush off and have lunch. I'd like to thank all of the panelists today. Mathieu, appreciate it. Bonsoir. Sam, thank you for coming.
Thank you.
Thank you. Kirk, enjoy Miami, what's left of the evening. And Mr. Suzuki, I hope to see you in London soon. Thank you very much. Thank you.
Thank you.
Thank you.
ありがとうございました。ご登壇
Thank you very much, the two